The decision to buy or sell the currency pair depends on your expectations of the future price. If you think that euro-dollar will rise, you buy the pair, or in other words, open a long position on this pair. If you think that euro-dollar will fall, you sell the pair, or as traders say, open a short position on this pair. As some time passes and the price of euro-dollar changes, you close the position and get profit if the price changed in line with your expectations, and if price moved in the opposite way, you have a loss on this transaction. To perform these operations, you need to place orders, or in other words, give special commands to your broker in the trading terminal. There are several different types of orders. The main are market orders, pending orders, take profit orders, and stop loss orders. Let's see what are their functions. Market orders, buy and sell, are designed to open position at the current market price. The position will be opened immediately after you place such order. Pending orders, on the other hand, allow you to choose entry levels in advance. In this case, trade will open automatically once the price level you have chosen is reached, and you won't need to be in front of the monitor when it happens. If you think that the currency pair will rise and then reverse to the downside, place sell limit above the current price. If you expect the currency pair to decline and then reverse to the upside, place buy limit below the current price. If you think that selling will intensify once the price breaks a certain level on the downside, place sell stop below the current price. If you expect the buying to intensify once the price breaks a certain level on the upside, place buy stop above the current price. In order to close a profitable position, use an order type called take profit. In order to close unprofitable position, use stop loss order. For example, you enter a stop loss order 50 pips away from your entry point. As soon as the market moved 50 pips against you, your stop order would automatically close you out of the trade, protecting you from losing more than 50 pips.
Stay tuned for other titles in this series. They're on the way.